Hello and welcome everybody. I can see everybody's logging on still, so I'm delighted for all of you who have taken the time to come to this Emerging Payments Association webinar. I'm going to turn my light on and you can see me better. And today I'm Camila Bullock, so I'm the Director General from the Emerging Payments Association. And for those of you who don't know us, we are the leading branch organization for the payments industry across APAC. And we work towards a level playing field in payments and to enhance payments with a vision of improving lives everywhere. And that is especially relevant to the topic today because we're really looking out into the future and to look at how can we enhance payments and how can new technology enable this enhancement. We ran a previous webinar on the topic of blockchain and payments a few months back and was very popular, and we spoke a lot around popular topics around blockchain and payments and also trends and what we're seeing. We talked quite a bit about trust, and we talked quite a bit about Bitcoin, which often comes up, all the cryptocurrencies. But today we're going to spend more time on the pointy end towards the technology, and we're going to talk about what is unique. And we're not just going to talk about blockchain, but actually the underlying technology of DLT. And we're calling it the superpowers of DLT. And to help me with this conversation today, I have Richard Reid, who is an ambassador at the Emerging Payments Association. He's based in New Zealand. And we also have some awesome panelists that Richard will introduce you to. So Richard, over to you.
Thank you, Camilla. Good morning, good day, good afternoon, and good evening for wherever you are in the world. And thank you for joining us today for this hot topic briefing on DLT and payments. As Camilla said, my name is Richard Reid, and I'm based in Auckland, New Zealand. And let me introduce our wonderful panelists. Our first panelist is Monica Jasuja. So Monica is Head of Product Management at Conviva, and Conviva is the world's largest digital platform provider and based in India. Monica has extensive experience delivering software solutions in the financial services space. Monica is a digital payments expert and has worked in USA, Singapore, Thailand, and India. Thank you very much, Monica, for being part of the panel. Our next panelist is Dilip Rao, and Dilip is based in Sydney, Australia, and has over 40 years of experience with technology and banking and payment systems, and most recently with Ripple Labs in New York as their global head of infrastructure innovation. He led the business development for Ripple across Asia Pac and as well as Middle East, securing banking clients for RippleNet. Dilip was also the first peer-to-peer payment startup, the founder of the first peer-to-peer payment startup in Australia, and has advised financial institutions, central bankers, and regulators. Thank you, Dilip, for joining us as well. And our final panelist is Max Postigo, originally from Argentina, but currently living in Beijing, representing Banco de la Nación Argentina. Like our other two panelists, Max has extensive knowledge of digital payments, as well as trade finance as also witnessing firsthand the development of the state-backed digital yuan, or better known as eCNY. So thanks, Max, for also joining us. As Camilla said earlier, the Emerging Payments Association recently ran Payments Meets Blockchain session that sparked a lot of interest. And now we want to dig deeper into the payments landscape to look at those areas that could benefit from blockchain and DLT technologies. The format of today's session is to discuss 5 areas or capabilities where the decentralized technology will provide greater outcomes and efficiencies to the status quo. In collaboration with Wilmera Labs, Dilip compiled this list of 5 DLT capabilities. And in Dilip's words, DLT superpowers, and has developed a framework that will hopefully generate dozens of new use cases. The intention is that some of those use cases will become sponsored proof of concepts. Please feel free to share any other use cases or capabilities that you think could be achieved by using decentralized technology that we may not cover today. And we can actually discuss those use cases towards the end of the session. So over to you, Dilip. Could you give us an overview of your superpowers? And please, Monica and Max, feel free to chime in from your perspective.
Thank you, Richard. Just checking, you can hear me well. So it seems like it was just yesterday that on behalf of Ripple, I was evangelizing crypto and DLT around the world, mainly to frighten bankers back in 2014 who thought Bitcoin was going to eat their lunch. So of course the walls came up, but at the same time they did a lot of work in proof of concepts, pilots, etc. And here in 2021, it seems like the ecosystem has developed so quickly and so fast that it's like a separate world. So if you talk to anybody in DeFi, they don't really know or care what's happening in CeFi, the centralized world. And the people in the traditional world are kind of gobsmacked by what's happening over there and trying to just keep up. And that includes both regulators, technologists, and traditional bankers. So I thought, to bring a little bit of structure to it rather than rant on about all the things that, a blockchain and crypto can do for you, because usually the resistance is from, yes, but we can do that with what we have today. So why would we bother with DLT? Oh, it doesn't scale. So I'm tired of listening to all of those arguments. So instead, we thought, why don't we focus on what things uniquely are capable with distributed ledger technology so that we can solve problems that it solves better than traditional centralized technologies. Otherwise, it's always, well, you're not so good and I'm better at this, etc. That's fine. Let's find those use cases. So today, if at the end of this exercise, all of the participants have generated like 100 different ideas, and even 5 of them see the light of day, my work will be done here. So this is really not to give you ideas, but really to spur ideas for you to come up with, and hence this framework. So let me go ahead and share the screen. You can just let me know if you can see it, Richard.
Yep, we're all good.
Great. So really, what I wanted to do was kind of start off with maybe 5 IT capabilities or superpowers to make them a little bit more relatable, and discuss each of those with the panelists, and let's see what we have to say about that. And then towards the end, we can throw it open for more of a Q&A. So certainly I'm not claiming to be the guru here telling you what's what, it's more questions. So one of the things I've learned from my experience is if you can ask the stupid questions, you're actually a very smart guy, because then it comes up with answers that others have dismissed because, no, we can't do that. We haven't done that for 20 years. That'll never work. So I'm good at asking stupid questions. So the 5 that I picked here are firstly, 24/7 real-time view of ledger balances. Very, very simple, very straightforward. And I dismissed this in the early days of Ripple, but discovered this was actually quite a big deal in banking. Secondly, probably the most interesting one, programmable 24/7, what are called atomic settlements, which means that the credit and debit happen exactly at the same time. If the credit fails, the debit fails as well. Actually, the term atomic settlement was something coined by Ripple, and then we pitched it to the Bank of England, and now they're using it, so it's become part of the lingo. Third one is what I would call no issuer or native tokens. So these are your traditional Bitcoin, Ether, XRP, etc., where there is no issuer of this token. And this is probably the most controversial. And initially the view was, well, this is going to take over the world and say goodbye to fiat and central banks, and this is going to be the way the world works. I don't think so. The question is, can it work alongside fiat and traditional currencies, because it solves a problem that they can't. And that's something we'd like to explore. Fourthly, issuer tokens, which is there is an issuer. Now it could be a bank, it could be a private party, it could be a central bank. And the question is, what does that do and why is that interesting? And finally, because we can't have a conversation about this without NFTs, we'll talk a little bit about NFTs, not so much because they solve a problem in payments, but because they create an opportunity for payments, which is quite different in terms of this new economy, which is being built around the metaverse, if you will. So these are kind of the top 5. There are others, DAOs, etc., which are all new concepts, which I think have potentially a lot of opportunity and potential, but we'll stick with these and have hopefully my fellow panelists who know more about some of these things than I do will be able to join in fleshing this out. So the first superpower is 24/7 real-time view of ledger balances. When I start pitching RippleNet to banks, I said, well, you'll be able to see your balances in 20 countries in real time. And they were gobsmacked. I said, well, of course, it's not such a big deal. I mean, you're a global bank. You already have such a system. And I said, no, not really. We had to keep sending messages through Swift to find out what our balances are. And often it can be several hours, half a day. And therefore, we actually don't know how much money we have, especially since we have lots and lots of so-called nostrum accounts. These are bank accounts that banks hold with other banks. And that's the way we run our business. So it's a lot of guesswork. And this holds for corporates as well. So if you're a corporate and you receive money in one country because that's where you make your sales, but you have to pay people in another because that's where you produce your goods, then you need to have inventory, so to speak. You need to have currencies in multiple markets. So that's another problem. I don't know how much money I have, and maybe I'm going to be short, and therefore I need to fund it. But basically, if you don't know and you're guessing, so one big multinational said, we are off by about 15% in terms of our guesses of how much money we have. And frankly, if we can reduce our holdings by even 10 basis points, that changes our profits by about 1%. So this is actually a big deal for us. So I just want to throw that up, to the panel. And I know, Luis, you have some background in supply chain as well. Let's just maybe talk this through a little bit more, if you think there is anything here. So back to you guys on the panel, if you wanted to make a few comments. Monica, Luis.
No, please go on, Monica.
So Dilip, I would like to say that in India, something phenomenal happened last week. The national framework for blockchain was actually introduced to the public. And obviously, the Information Technology Administration has outlined blockchain specifically for use in banking as one of the major use cases, which is not only something that is up for adoption, but is already being piloted. Now, interestingly enough, you talked about the ledger balances, and this particular report also talks about how both intra-bank as well as interbank transfers would be something that the IRDBT, which is obviously the financing and the governing body of banking in India, is looking at actively. And there are at least 3 to 4 banks, which are the top 10 banks in the country, who are already part of this pilot. So this seems like a use case that is not only up for adoption, it's already being piloted. What I'm really confused about, though, is how this will get adopted and kind of be made known to the public in terms of both efficacy as well as what efficiencies it is driven. Interestingly enough, the government also talks about the use of the central bank digital currency kind of based on top of this blockchain kind of DLT ledger that will then get introduced. So this is the view from India.
That's cool. I mean, the way the approach we took in RippleNet was you couldn't convince a bank to obviously run their ledger directly on DLT because it's not scalable. So that's fine. So we ran a ledger alongside their ledger and we synchronized the two. So what that means is that if a transaction happens in real time on the DLT ledger, it updates the bank's ledger. If a transaction happened on the bank's ledger overnight, thousands of transactions, the balance gets updated on the DLT ledger. So by keeping these two ledgers in sync, one being 24/7, never shuts down, whereas the bank ledgers, as you know, 3 in the morning, they all go to sleep to do their overnight processing. Then they wake up again at 6 o'clock in the morning. So you don't have that issue because you can keep this an online balance, so to speak, available 24/7 across the world. So there's a little bit of subterfuge, so to speak, but it does what it does, and therefore you don't have a scalability problem because you're not trying to pump millions of transactions through this ledger. It's simply reflecting what you have in your proprietary ledger.
There is one point, guys, that is extremely important. The superpower number one, and it's in the discussion by central banks, especially in Europe and cross-border transactions. It has to go with the who has access to the database, the data of the customers. This is a key thing in terms of the feasibility of allowing the real-time inventory. Because if you see so far, what we are doing in banks, what we are allowing payment based on a confirmation sent under SWIFT code from a bank through another third-party bank through an intermediary bank. With this real-time view of ledger balances, both entities that are connected, or three entities, if there are three of them, need to have real-time access to the client database. This is a key thing. And of course, Dilab, you know very well, this discussion is happening right now. We don't have a conclusion on this. It's very important to take into consideration.
Certainly, and I think the issue for cross-border payments has always been knowing who the remitter is and who's receiving the money. And for AML, CTF considerations, some information needs to travel with the value, because that's the only way every bank in the chain can say, yep, I met my compliance requirements, rather than in the olden days, a correspondent bank would say, don't tell me anything about the customer because I don't want to be liable for it. But now the regulators are saying, I'm sorry, you can't do that. You can't shut your eyes. If you're moving the value, you have to know that everybody has been compliant all the way down the chain. So in fact, it's not necessarily access to the customer database, but enough information that allows you to pass the compliance requirements to travel with the value. So we'll get to transactions, because this first superpower is simply, I can see the balance. That's all. I've done nothing. I've not done any transactions. I can see the balance, and that's already valuable. So it is very low impact. Compliance is not going to get anxious about it because you're not processing any transactions, but you're able to create value just from a view. And I guess the question is, how many other problems do you have where simply knowing what your balance is in real time is helpful, either for an SLA that you want to meet or because you can reduce costs? Because as you know, currencies for banks is like inventory, and you want to reduce the number of SKUs, and you want to make sure you have the right SKUs in the right location. And that is kind of the starting point, is being able to see what you have. If I go to the second superpower, which is really about programmable 24/7 atomic settlement, then you're suddenly much, much more sophisticated and smart here. So on the atomic settlement part, really the ability to bring together a synchronized transaction across multiple databases. And you mentioned this example, Luis, of a cross-border payment, where really ledgers are being updated one after the other in different time zones, which means you're always out of sync. Therefore, you're always trying to reconcile to what somebody else said and where are they up to. It's all very batch oriented. So being able to take a transaction and have three ledgers update at the same time, that's an atomic settlement, and that's very powerful. And I think the question is, again, where do we use that, and what value does that deliver, especially to corporates? So today, a corporate that has to fund a payment has to put the money in there at least 3 days before to make sure this money is going to be there. So firstly, they don't know how much they have. Then they're trying to pre-fund this payment so that the payment will go through for a big payroll or whatever in the Philippines. So if they get the number wrong, then they're short or they're over. Either way, they're screwing up. So being able to do that just in time becomes suddenly a very significant capability, because you don't have to keep the money there. You can just deliver it when you want it. And if all your payments are happening in real time, then you have money coming in, but you know when it's going to come in. Because today, when a payment happens, you know that the payment has happened after you receive the money. You had no idea that it's going to happen today. You didn't know exactly when it's going to get settled. So I think that solves a problem. Again, both if you wanted to arbitrage it, trading bot kind of thing, buys in one market, sells in another, or a corporate funds or supply chain payments just in time. But are there other things that you could do with programmable 24/7 atomic settlement, do you think?
Any feedback, Monica or Max?
Yes, again, this is a very good example, Dilap, very nice example in terms of the programmable based. As you guys know, there's been a lot of discussion under the current digital renminbi about the possibility of doing programmable payments or programmable incentives to the economy, both based in B2C and B2B. So this superpower number 2, to make it maybe from the banking point of view, this is the possibility of opening the door, of opening the tab once a day or twice a day or on programmable basis. And again, the visibility of the data in this case also has to be connected, and in the availability of data won't be 24/7. And Mr. Rao explained very clear, this is the connection will be based on this program basis. So we will have to update the data based on this. For example, for Latin America, Latin American banks and cross-border transactions, this second superpower is much more feasible to implement, because the technology and the advanced penetration of the banking industry is much less than the rest of the countries in the world. So for us, for countries in Latin America and cross-border transactions in Latin America, China, for example, or Latin America, Australia, Latin America, Europe, or even US, Latin America, this second superpower is much more feasible.
Yeah, look, and I think this works both in domestic situations as well as cross-border. And as you know, Australia now has a new payments platform. I think it only cost us just a bit over $1 billion to build across the industry. Now, that's a very expensive platform for 25 million people, but we can afford it. We just sell you some more coal. So the question is, what do smaller countries do to have a real-time domestic network? And I think one possibility is building on DLT to give you a real-time capability within the country. Now, if you then connect into other countries, and there is a problem of liquidity, and I'll talk about that in a minute, then suddenly you have potentially a cross-border real-time payment, which is kind of the holy grail, both for wholesale and corporate and retail payments. But the other thing that I like about this is, once you tokenize any asset, whether that is a share, whether it is a piece of property or is a digital art, connecting it to a real-time value settlement makes for a complete change in how you run markets. And the ability to now trade 24/7. A lot of financial assets are already tokenized, so it's not hard to imagine that. So I get a share on the ASX delivered to me at exactly the same time as my money is delivered to you. But I think that bilateral transactions with only two parties to a transaction can be done quite well in a centralized database. And that's what the traditional SWIFT would say, but we do that already, and we do that at millions of transactions. So what's the problem? But I think the minute you have three parties, or worse, you have 15 parties, or you have 100 parties to a transaction, and all of them have to pay up before this transaction can proceed, then suddenly you've got a problem. Then you do an escrow. Everybody has to deposit funds into an account, and we wait for everybody to deposit their funds, and then 3 days later, we'll conduct this transaction. That's very inefficient. People are locking up their money for long periods of time. So an ability to do that and say, right, I'll make 10,000 people make a payment exactly the same time as I deliver this asset to them. A multilateral transaction being settled atomically can be a game changer in many applications.
You could see this happening in the equity markets, couldn't you, Dilip, in the sense of what we've got this T+3, that all of a sudden we don't have that anymore. We have real-time transaction.
Yeah, but I mean, also, for example, in insurance, insurance claims are being paid out to several people at the same time, and it has to meet certain conditions. Or let us say there's a merger, and many people are contributing to this acquisition. Well, all the money has to come through before the shares can be transferred. So all these are currently escrow transactions run by big banks, with billions of dollars being held up until the last guy has paid his $50, so to speak. So all of that can be made much more efficient, and you don't have to hold money in 10 different markets, because if I want to trade on the ASX, but I also want to trade on the NYSE. So now I'm holding money in multiple places because I want to do trades in that market. And this was something that the Bank of England, told us, which is we want to make money more efficient, so you don't have to hold it in 20 different places. And the only way you can do that is a delivery versus payment with an atomic settlement, regardless of which market you're in. So there's actually a complicated problem that to solve with traditional technology. Now, it's hard even with DLT, because it requires a bit more thinking as to how you do this. But I think there's an opportunity here. Okay. The third superpower is really about native or no issuer tokens. You're missing the heading here. And here you have got things like, a Bitcoin, XRP, Ether. And the first reaction from everybody in banking and central banking was, you're trying to eat our lunch. This is what we do for a living. We work with fiat. Why are you coming up with this? What is the point of this? Jamie Dimon said, this is worthless. It has no place in the world. But think about it in terms of gaming, for example. And these are big economies now, gaming platform, tokenized economy. It doesn't need to have fiat floating around because a lot of my trade is happening within that economy. Now, why don't I have a token which is then politically neutral? It doesn't get affected by, what President Biden tweets tomorrow or whatever. Or is it potentially an alternative to correspondent banking liquidity? So if you look at ASEAN, 50% of trade in ASEAN happens within ASEAN. But you know what? The majority of their payments are bridged in US dollars. So somebody is buying something in Malaysian ringgit, paying in Indonesian rupiah, it is going through US dollars. So in one of my early sort of Cybos meetings, somebody from the Asian Development Bank asked me, do you think we could use a token like XRP to bridge this? I said, yeah, absolutely, you could. So having a neutral token, especially in ASEAN, can you think about it? The reason nobody's going to allow Singapore to make that the reserve for ASEAN, right? The Malaysians don't like it, the Indonesians don't like it. So who is going to agree in ASEAN as to which currency is the reserve? Well, nobody's going to agree. So now you're stuck with the US dollar, and the problem that is creating is dollarization, as they call it. Their own currency is being devalued. So the question is there an alternative where to use a native token, whether that's whatever fits the purpose in terms of your volume of trade, transaction throughput that you need? Or could it be used, for example, one of the applications that came out of Ripple was a company called Coil, which is basically trying to monetize websites so that you pay while you're visiting it for how many ever microseconds you visit that website. Now, it's very hard to do in fiat currency because you can't move, a transaction costs you 30 cents. So how are you going to move 1/1,000,000th of a cent? So that's where tokenization and maybe a neutral token, whether that's Bitcoin or Ether or something else, could potentially play a role, so that instead of asking people for a subscription, I say, look, if you spend 10 minutes on my site and it's content that you enjoy, why don't you pay me for the 10 minutes? And there are no ads. So that's kind of the proposition to say, are there new monetization models? Because we argued about micropayments. It's micropayments. Do we need micropayments? And why don't we just have a wallet and we use that for micropayments? But if you talk about nano payments, so I'm deliberately using that term, then suddenly you maybe think about new models for how you monetize services. We already know that in video, you pay a subscription fee. But I hate most of the movies that I watch, but I paid for it. What if I just paid for the ones that I wanted to watch? So back to you guys on native tokens.
On my side, I think that what I'd like to contribute here from the banking perspective, we have 3 big issues. Number one has to go with regulation compliance that is extremely delicate. And we have examples of countries that are already applying regulation on payments, or even the ability to hold these kind of tokens. The second thing will be traceability of the transactions based on also the potential let's say the ability from the involved parties to know from where and to where the money is going to. And the third and last I wouldn't say risk, I would say item to pay attention to would be the different potential values, or let's say the volatility of the assets. If you see what has been happening the last 2 weeks with the value of Bitcoin, for example, or even Ethereum or any other of the 2,000 coins that we have in the market, the risk of holding the asset is extremely high if you think about cross-border transactions. And as an example of this, we can have with the situation now in El Salvador. Again, I don't think I want to give this as a. I'm not saying Bitcoin is a bad thing. I'm trying to be very simple from the banking point of view.
Yep.
The risk on the superpower number 3.
Do you think, Max, that what happened in El Salvador, do you think that was just a case of a bad implementation? Or do you think it's actually more specifically around the Chivo payment system not working? There was just a lot of things that didn't go right. But I suppose a lot of other countries are going to be looking, as they go down the CBDC journey, they'll be looking at El Salvador as a use case of not what to do.
Well, I believe that happening in El Salvador has to go with both a technical issue and a political issue. Right. In Latin America, El Salvador is a good example of how complicated are the economies. Recently, I had an event with the China-Ecuador Chamber of Commerce last Friday, and we got a lot of questions regarding cross-border payments. But I explained to the crowd, mostly were companies doing import and export from Ecuador to China and vice versa. The big thing is Ecuador has the US dollar as the local currency. They adopted the US dollar a few years back. And of course, that's a good thing and a bad thing at the same time. So they have no ability to issue currency, the ability to have different values of the currency. However, on the other side, they don't have the issue of internal inflation, and you don't have the issue of problems with the issue of currency, what it gives the instability of the local value of the currency, as we have in other countries, like, for example, today.
Yeah, I thought that might happen. It seems to be that his Wi-Fi is not working too well. Should we move on, Dilip?
Sure. So certainly I accept that, regulation is kind of the biggest barrier at this point for the use of native tokens. And the question is, we have to figure out how to give comfort to regulators that this can be used, safely. One comment I'll make on regulation, I don't know if you guys saw the fireside chat, Jay Clayton with Gary Gensler, two SEC chairmen talking to each other. And I think there's still a long way to go for them to get their grip on all of this, because they're still using very traditional mindsets to manage the risks here. So I think we still have a long way to go. Superpower 4, I put this into this category, issuer tokens. So there is an issuer. So there you go. SEC is happy because there's somebody they can sue and hold liable. So it could be a CBDC, so it's issued by a central bank. Could be a stable coin issued by JP Morgan or Joe Blogs or whatever, USDT. Or it could be a security. We say, yes, it's a security. You're going to buy shares in the company. These are all issuer tokens. So the question is, what problems can these solve? I think one that comes to mind is it's already being used as on-off ramps into crypto or into DeFi, because it's very clunky to convert from fiat directly into a token that you want. So you go through, something else as an intermediary. Now, this is probably, I'll get taken down by somebody. What if you could use a CBDC as an on-off ramp, into a crypto token? Now, maybe the central bank doesn't like that idea, but actually is a neat way to take one token to another, because you're converting from non-tokenized, an account-based value to a token-based value, and that's a hard bridge to cross. And then if you go from one token platform to another token platform, again, you need bridging technologies, to do that safely and securely. Now they have wrappers that you can use to put a wrapper around a token and take that across. So interoperability, is still a problem to be solved. And the question is whether these help or hinder that kind of problem.
Just on that one, Dilip, there was a Kay put through a question, and he was asking, there are many cryptocurrencies, DLTs in the world. How is it possible to deal with interoperability issues between the multiple types of DLTs? Is this resolved using, for instance, ISO standards? Or how do you actually bridge those interoperability gaps?
Yeah, some of the early work that was done by Ripple was something called the Interledger Protocol, ILP. I don't think it really took off ultimately. It was ultimately used, and it's being used for streaming, but they try to demonstrate that to say, here's value moving across 8 different DLTs without friction. I think they're still trying to solve the problem. Now you have bridges between platforms, you have this wrapper concept, but I think interoperability remains a big issue. And I guess one concern is everybody's trying to build their own platform without really thinking about interoperability. But if you think about it, becomes a bigger issue, for example, with NFTs. If I buy an NFT in a game, then is it only good for that game? It's like saying, I bought this shirt at David Jones, I can only wear it in David Jones. The minute I step out, I'm naked. I mean, that's stupid, right? So I think that is a bigger problem to solve. I don't know who's writing any standards. Nobody seems to have any time for standards. They're kind of racing to build a solution at this point.
Thank you.
But I think Cbdc is interesting. And for a long time, the view was, why would a central bank issue a Cbdc? And the question is, does it solve a problem because it is tokenized? Now, a central bank will probably never allow a permissionless public ledger where somebody is validating their fiat to happen. It's hard for me, it blows my mind to see that happen. But a permission ledger with maybe just the banks participating in it, why not? So different, that's why I haven't focused on what kind of DLT it is, whether it is permissioned or permissionless, because the different use cases, I think, will require different technology flavors, to solve for, to meet the requirements of the issuers in this case. Okay.
Just on that one, I'm just thinking that was just for Max, because obviously you're very close to the digital yuan. The interesting thing is about, do you think it would become the predominant currency in the region? And what do you think happens when you've got sort of, for instance, trade between US and China with respect to the preferred currencies? How do you see that playing out?
Okay, yes, this is an extremely important moment. As you all know, the digital yuan is in the market since September 2020. Recently, I was suggested by my business account in ICBC to start using digital renminbi for company payments, for banking payments. Again, the big issue here will be when the digital renminbi is going to be extensively utilized in the local market, B2C, and secondly, B2B. And then in B2B, we also need to start thinking about the cross-border payments. As you all know, today there are a few countries already analyzing the possibility of implementing cross-border payments. I can name Emirates, Singapore, Malaysia, Indonesia, and other countries in the region. There are discussions, of course, of cross-border payments with China, Europe, and China, US, China, and Latin American countries, especially countries with FTA, like Chile or Costa Rica. But as I said before, the key issue is the big difference between Cbdc, digital yuan, and the current payments that you have in China. There are 6 clear differences. Number one, offline payments. You can make payments with the phone or the tokens. Tokens are the number two difference. They're going to be issued tokens. They're estimated in China over 100 million people, unbanked people, without access to banking system, that will be tokenized with the tokens as this bracelet, for example, this phone, this NFC enabled, and will be able to hold the digital renminbi wallet. And then we have the safety issue, all the traceability of payments. If you lose your phone or something happens with your phone and somebody makes payment with your digital renminbi, basically that can be traceable until at the end, so it will be returned to you. Then you have the issue of the concept of tax collection. Of course, taxability will be much easier for governments. Then you have a very, very big thing that has to go with what we discussed before, the possibility of making programmer payments, both for incentive of potential areas of the economy, or to creating incentives also to certain groups of people or certain areas in the different country. Can be internally in China or can be cross-border. As I said before, in my personal opinion, and I've been saying this in different forums, we are in front of a new Bretton Woods. We are in front of a break-even point in the global economies. Bretton Woods happened in 1944 when the US realized that they hold the whole gold of the world. Now, with the digital currencies, Cbdcs, of course, UN number one, the digital renminbi, I believe that the countries need to sit down, the central banks need to sit down and agree on a way of making these cross-border global payments. And I believe that Mr. Rao is making a very clear explanation of the different superpowers. So all these discussions of the central banks will go in this direction. This is a personal point of view, but definitely digital renminbi will be in the global arena of payments very soon. As you guys know already, the 1st of January 2021, the SWIFT code and China interbanking payment system already reached an agreement. So basically, a lot of banks now are making payments in renminbi. So yes, the answer is yes, Richard.
Monica, what are you seeing?
Richard, I'd like to chime in on this because there are a couple of things happening, and I'm going to take off from what Luis just said. One thing is that the Prime Minister of India has also called for all the G20 countries at least to come together to consider what is happening with the crypto world and, of course, the democratization of available real-time payments and, of course, CBDCs. I think the bigger question that everybody is trying to solve is why do it ourselves when we should be able to do it in a manner which is obviously more encompassing of the real-world economies that are currently contributing towards this phenomenal growth. I think Dilip has mentioned about the issuer tokens. We are seeing small bits and pieces of this kind of emerging from every different kind of payment operator. If it's cards, then it's issuer tokens, which are now coming through because of carded payments requiring tokenization by a central bank in India. Then you have the ability and, of course, the availability of a lot of stable coins. Luis has spoken about China yuan. Now, the question is, everybody is kind of doing their own thing to have interoperable hubs which are created. We've all heard about VocaLink and what it's done in the UK. Now we have a similar exercise going on in India. So the question really is, how are these different payment types going to come together? If not, if they're going to remain separate, are they still solving the problem of real world economies and cross-border trade or domestic trade or even intra-border trade, depending on what kind of religion-wide consortiums you have and how you're going to enable that? Because the stronger the consortium of a political or a country affiliation, the bigger that particular consortium becomes. And right now, that is why the Chinese yuan looks super powerful, because they're actually going and creating all these partnerships that we seem to not be understanding what it's leading to. So personally, for me, this is the biggest takeaway. And this one, I think, is going to be the hottest topic ever for the many, many quarters that I see going forward.
It's the new Belt and Road, if you will. Now, look, I think with CBDCs, the opportunity is, if you ask a correspondent bank, what do you want to do with your global network? They all say we want to shrink it because it's too expensive to maintain links in every country, 30 countries, HSBC, whatever. But if it was cheaper with CBDCs to be able to hold liquidity in that currency, maybe I'd do it. And maybe a bunch of small banks can then say, I'll hold liquidity in this pair because that's where a lot of my customers are. I don't need to be a global bank. I'll just hold these two. So I think for central banks, the question is, how do you leverage this technology rather than just say, well, we already do this? I think for a domestic marketplace, if you have something like the NPP, you have something like UPI in India, you might say, I don't need a CBDC if everybody is on this system already. But if you're not, if you're, the governor of the central bank in the Philippines said, Dilip, my problem is I have 6,000 islands through which my population is distributed. I have very limited infrastructure in these places to deliver money. So how do I do that? How do I solve the problem? So I think that's where you have to see whether DLT offers cheaper, lighter infrastructure, but still gives you the offline opportunity because it has to work offline because we're not guaranteed to have power or connectivity always. So I think it's horses for courses. I don't think it's everybody needs a CBDC, but it could be that it solves a problem in certain regions, in certain economies, both for domestic and for cross-border.
We got a question here that the e-renminbi does not run on DLT, but is centralized. Is
Correct.
DLT a must or recommended for CBDCs?
I'll let either of you go with it first before I comment. Luis, Monica. So, I mean, I don't think a DLT is essential. It's not a prerequisite, to having a token, and China has showed you that. I think the question is, what then is the innovation? How do you get the leverage out of the innovation? And the ideal of a token, which is something that you can hand to somebody, and they now have possession of that value without holding an account, which is much more complicated, creates value. And that's a differentiation. So that's what the DLT brings to the table, is an ability to move this around simply, quickly, and cheaply without having to hold complex technology integrations into every country around the world. So it doesn't have to be, but I think it helps. That would be kind of my guarded answer at this point, rather than say DLT or else.
Thank you.
Okay, the last one is NFTs. And I say this only because this has become hot and everybody's now buying NFTs and or selling or creating NFTs. Of course, a lot of this is very digital still. So all of the value that is being created is for content which is digital. Therefore, you can mint it and you have a guarantee that this is the item that is being sold, on this DLT or blockchain. When you start looking at NFTs that represent real world assets, then I think it becomes more valuable. I mean, we can all buy a piece of a toll road in Canada as opposed to, the big end of town, but it's much harder to implement, because how do I know that I have a piece of this particular toll road or not? So the onboarding of the content of the asset, the ability to mint it, break it down, is certainly very democratic, but I think calls for much more tooling and infrastructure, which creates opportunity, I think. I mean, my approach with all of this is, if there is a problem, this is an opportunity we can solve, and therefore somebody can build a solution for it. Not that, we can't do anything because this doesn't exist. This is a brand new ecosystem. They're calling it the Web 3.0. Zuck calls this the new metaverse. So if this is where we're going to be, using these assets, whether they're fungible, non-fungible, then I think there's huge opportunity for creativity here. What do you think?
On my side, I totally agree. I've been also talking, you probably hear me, and I've been discussing the concept of smart cities and social credit. I merged with this concept of digital cities and metaverse and NFTs. It's a reality. It's a reality, and it's very important for all of us in the financial industry to pay attention to it. Of course, you might say that there are a lot of things still that are not extremely clear, of how transactions are going to be made and how the real world get connected to these digital cities, or the way that you can do for example, a concept of valuation of NFTs. However, we cannot stop analyzing the increase of global value and the increase of issuing or NFTs and the amount of new applications that NFTs have in the, like I said, in the smart city concept, social credit, and the digital cities. Is the convergence going into this direction? Some experts in the industry might not like this, the way that these things are going, but it's a reality. It's a reality, especially for Generation Z and the younger industry leaders. Mr. Rao made a good example before about the gaming industry. In the gaming industry, the applications are growing and growing, and in the art industry too. And these are two examples, two real examples that we cannot stop paying attention to.
I wanted to add in that India has the biggest Bollywood industry, obviously the film industry that we are all aware of. All the Bollywood big actors have jumped into NFT, which has actually prompted the government to ask whether this is going to be taxed. So the bigger question, I think, with all the emerging technologies are, how do we tax them? Is there a common protocol to be able to figure out the actual denomination or holding value of a digital asset, and therefore be able to attack this industry, making it better for content creators, at the same time not creating problems for those who buy such content. So content monetization backed by the right kind of regulatory regime, I think, can help really make this grow. I personally feel that NFTs is the way to go, and it's going to stay. But my bigger problem is around all the extra frills that we need to also address to as a regulated industry. If it remains unregulated, then it'll stay the way it is.
I'm not sure why one of these platforms doesn't automatically have a smart contract to pay the tax office 5%, 10%, then everybody will go away. This is like gambling, big time in Australia, and the government makes a huge amount of money from it. So it's all very good. Yes, we'll help problem gamblers, but please keep the money coming in. It's ridiculous. So yeah, give them a little cut and maybe all the problems will go away.
I see we've got 5 minutes left. We got a question for you, Monica. So Monica mentioned about the blockchain work in India. In 2021, India ran an umbrella payments licensing scheme where the large payment businesses formed a consortia to bid. But India stopped the bidding process in lieu of other priorities in government payments. How reliable will India be in the rollout of blockchain or in payments, i.e. CBDCs?
I am not the least bit surprised that India did actually put a stop to the new umbrella entity framework for retail payments. The reason is because we're right now faced with what I kind of have helped describe, with so many extras that are being created in the retail payment systems chain itself. And right now, regardless of whatever is happening, whether it's crypto, whether it's blockchain, or there are others, I think the biggest concern that we all have is associated with the data framework. That is also a bill that needs to be tabled to Parliament. Once that is there, then obviously the whole association of who as an entity will operate, what powers and monetization opportunities consumers will have over their data will take precedence over everything else that we see. So personally, I think the government is waiting to kind of outline all that, the frameworks which need to exist to make foreign or local players therefore become available and eligible for this particular partnership proposal. Otherwise, we were seeing a lot of unlikely partners come together, which was not kind of making sense. If it didn't make sense to us as outsiders, then I'm sure the government had its own concerns. But from where I'm looking at things, CBDC/crypto bill is something that is already kind of up in the Parliament. I see that going forward. However, the larger, I think, consortium of G20 countries as well as BRIC countries coming together to create somewhat of a cohesion for CBDCs is something that I believe will happen next year.
Thank you, Monica. I'm going to hand back to Camila, who's going to give us a quick poll.
Yeah, fantastic conversation. And that went way much quicker than I thought. We probably could have spent even more time and got more of the audience on the use cases related to those superpowers. But I prepared a little poll, so I'm going to launch it to see what superpowers of DLT is most important for payments. So I think that is up on your screen now. So yep, people starting to answer. So while you answer this, I'm going to speak a little bit to it. What we've done this year is to have a broad conversation around blockchain, DLT, crypto, and sort of whipping in and out in different topics to see what is the Emerging Payments Association's role in the conversation, because I think everybody has not really known where it's going, and we still don't really know where we're going with it. But I remember we ran the first webinar on cryptocurrency in June 2019, and you probably will know what happened back then. That was when Libra was launched. And we also had a conversation with one of the central banks around the same time, and they said no way we would ever do CBDCs. So yes, in that amount of time, it's shifted so much. And we think with the work that FSB is doing around enhancing cross-border payments and taking CBDC into that conversation, we think it will look different. And we think that we'll really have a role in driving, translating the conversation, but also come together around standards. So thank you very much. We see here that the programmable 24 atomic settlement is up there. That is very interesting, followed closely by real-time view of ledger balance. We'll take those results into when we're planning for next year. And one of the first conversations we're going to have on this topic is in January, when we're talking about CBDC's role in real-time payments, in cross-border real-time payments and settlement. So continuously using the first quarter to see what we're going to do, because there will be a project and a working group coming out of the Emerging Payments Association around this topic. And I hope that I will have opportunity to speak more with Dilip and Max and Monica and Richard. Thank you very much for contributing to this session. Or an upcoming event that we have this week, which is not, I shouldn't say everything is entwined in payments. You can't say that things are not linked, because every project we have cross overlaps, but we're going to talk about more the distributed financial models in embedded finance and payments, that out of a cross-border perspective. So of course, all those things come up again, and our favorite topic of digital identity is surely going to play a role in all those topics. But for now, thank you very much to the audience, and thank you very much, Richard, Dilip, and Max and Monica. And we hope to see you all soon again. And if I don't see you before the end of the year, I see you in a happy 2022.